You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at Bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it's time once again for TWIFO, This Week in Futures Options, a program where pretty much the name says it all. We break down the week that was and indeed still is from a futures options trading and trending and volatility and open interest and unusual activity, all that good stuff going on the futures options side of the fence. My name is Mark Longo from the optionsinsider.com, as well as, of course, from the ever exciting, at least we know so, Options Insider Radio Network. If I sound a wee bit different, it's because I'm not in our studio in scenic and sunny Chicago. I'm actually in where it's supposed to be scenic and sunny, Central Florida. Instead, it is horribly rainy. I think the gods are not smiling on our program today, listeners, because second I hit the button to go live, tremendous thunder and lightning, and now it is a torrential rainstorm. So hopefully we don't get knocked off the air mid-show. We'll keep our fingers crossed here as we are apparently in the midst of some nasty, nasty weather down here in Central Florida. But we'll do our darndest. You guys may have noticed there was no live vol views today. It's because we are indeed traveling, coming to you from the southern studio today. But you should be looking, stay tuned to the network. you'll hear some good stuff from the Pro Trader Summit we were at this week. Fair warning on that audio. It's a very noisy event, so we'll do our darndest to calm out the background noise there for you so you guys can hear all the good stuff. But we had some good stuff. So stay tuned to the network. No live shows for that, but you will get shows in the network feed. So if you're subscribed, you'll get those. And, of course, however you listen, live after the fact, including if you're listening to us now live, make sure you hit us up. Questions, comments, insights, pearls of wisdom. We do indeed like to hear from you guys. And I got the band back together finally today, which is nice. We're not in the same room. We're scattered to the four winds, but we are all here together on the program. Starting off with my cohort, my partner in all futures options crimes, Mr. Nick Howard, the creator of Bantix Technologies and a little platform we like to use, I don't know, once or twice around here, called Quick Strike. Mr. Nick, welcome back to the show. And which undisclosed location are you beaming to us from this week, sir?
Well, I almost fell asleep during the intro because there was no music, and
the audience got the music. I got the music.
I did not. I was humming to myself, and I'm sitting in the sun in beautiful Lake Geneva, and I forgot where I was for a minute. But so far, so good. Hopefully, I don't sound too muddled. I'll do my best to stay online as well. But
yeah, how funny
for spotty internet.
I leave Illinois, and I get to go south for better weather, and I get this, and you get the beautiful sun in Illinois. So c'est la vie. You know, you can't win them all. And also joining us, I'm happy to say he's back. I'm happy to say he survived his near-death experience with pneumonia. He kind of had a run of bad luck there. You know, he come on the show and then immediately struck down. Then he had to do some other stuff. But now I'm pleased to say he is back joining us here on the old TWIFO program. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Sean, welcome back to the show, sir. It has been too long.
Thanks for having me back. It's great to be back. And under full disclosure, I am downtown Chicago. It's sunny, going to be in the high 80s, and we're supposed to get a kind of a heat cycle through where we're going to be in the upper 90s and heat index of 100 plus. So being in Florida is probably a good thing. Being in Lake Geneva with your toes in the water, and I won't mention the other physical parts in the sand, but enjoy yourself up north there.
Yeah, Sean, you know, if I had known you were going to be down there, I should have left you the keys to the studio. You could have come down across the street and just fired up all the machinery, and you could have run the show for us this week. How would that have sounded?
I could have done it. And who knows, Nick, you could have probably heard some music if I had been there.
Yeah, see, there you go. Hold the music against me.
I'm going to need something.
The audience had. I was dancing along to it, even if you guys didn't get it. And you know, of course, you would have had free access to the after show fridge as well, which has all sorts of goodies in there for when the shows are concluded. All right, let's get rolling here with the show. Well, Sean, it's been a while since you've been on, so let's start in your neck of the woods. I know this is also kind of an active time for you, kind of a busy guy. So good thing you overcame that dreaded bout of pneumonia and you're back walking around again, because it's active time. It is indeed Russell Reconstitution times. I know this is a big time for you boys over there at FTSE Russell. Maybe we'll start with this for a lot of our listeners who maybe don't trade Russell day to day, aren't familiar with that. Let's start there. What the heck is that? What are you guys doing with this Russell Reconstitution?
Well, a good, easy way to think about it is every year, once a year, Russell takes a very strong, critical look at the components of their indices. Markets change, companies change, prices in those stocks change, market caps change. So in order to stay fresh and realigned with those markets, Russell once a year takes a look at all the stocks in the index and reconstitutes them to kind of hit the refresh button to make sure that the components of the Russell 1, 2, and 3 and the 3 family are all at relative levels. And there's a very strong objective methodology that Russell uses to make sure that the right stocks are in the right places within the index family. So that's what recon is. I can also kind of explain the chronology of events that is in the middle of occurring right now. So
yeah, go for it.
June 8th was the day where the preliminary list of additions and deletes are posted. The following week, the list is updated and finalized, and on June 22nd, that's the real reconstitution day. It's the final day that stocks trade in and out of the index with investors. So they're historically the largest volume days on the NASDAQ and the New York Stock Exchange stock exchanges. And then when the market opens on June 25th, the indices are all with the new components in them.
Yeah,
so that's recon.
I was just going to say that has to be a big driver of volume for you guys. You're seeing, inflows going out and then flows coming in. I'm looking at the schedule right now. You kicked things off back in May with the rank day when you disclosed the eligibility for the 2018 Reconstitution, determined from market cap at close. So there you go. Then June 8th, of course, those are the index add and delete lists are going to be posted there. And then
correct.
15th and 22nd. You update it with, I guess, some last-minute additions there. The 22nd is, of course, as you mentioned, that's when the Reconstitution is final. After the close on the 25th, they open with the newly minted Russell 2000. So I know, Sean, you're out there engaging with the clients and customers all the time. Is obviously, volume-wise, this is big. Is this a big driver for them as well? Does this maybe get them to perk up a little bit and trade a little bit more Russell and pay more attention to seeing what's going in and out? Is kind of a nice, and I guess for lack of a better word, a nice talking point for you guys as you're going around meeting with clients and trying to get them trading up some Russell these days.
Absolutely, it's a massive day for the components of Russell. In terms of volatility, the market has become so used to this transaction every year in June that and the facilities to do these transactions, there's usually not any spike in volatility. But I think I've mentioned on some previous shows, the markets haven't been as volatile as they are today in these days as they have been in such low volatility in the last few years. So I historically, this has never added volatility to the market, and we don't foresee it happening. Reconstitution happened during the Brexit announcement, and there was no spike in volatility due to the Reconstitution previously. So, as an example, so we truly believe and understand that the process that is put in place is pretty seamless and easy for investors to get in and out of the stocks that they need to move.
It's like you're reading.
Go ahead, Nick.
Go ahead.
Sorry, Mike. I think I was watching the Reconstitution on cable. Was it on one of the cable networks where the companies were sitting and watching, right, and waiting to see if they were still in the Russell or not? Is there any lobbying? If people are going to get kicked out, do you let them know? Do people complain?
It's a very objective methodology. There's no subjectivity at all in the process of reconstitution. It's your market cap. It's whether your stock from a methodology perspective fits, or it moves from either the Russell 2 to the 1, or it moves from the 1 down back into the 2 or into the microcap. But there's no lobbying. There's no subjectivity whatsoever in the process. It's very transparent and very objective for a purpose. So I hope that answers your question.
Oh, no, it's good. It's kind of like the English Premier League soccer, right? You get the winners, then they stay up there, then they get relegated down. So it's not really a demotion so much. It's really just...
Not at all.
Yeah, okay. That makes sense. Because and the other indexes, sometimes it feels like there's a demotion, right? Like they're getting kicked out of the Dow Jones or removed from the 500. I mean, I always sensed it. To me, anyway, it always felt like I felt badly for that company because like they were getting shunned or something like that.
They're getting kicked to the kids' table.
Here's some quick statistics for you.
Yeah, go.
Total U.S. equity market cap for the Russell 3000, which is the 1 and 2 combined, is up 13%. Meaning the market cap for the Russell 3000 index is $30.7 trillion. That's up 13% from last year. The Russell 1000 is at $28.2 trillion market cap, and the Russell 2000 is at $2.5 trillion. They're up 9 and 13% themselves. So very, very big numbers in terms of market cap for these indices.
Yeah, in terms of numbers too, Sean, it's been a while since we had you on, and a lot has happened since the last time you were on. A lot has happened that's kind of interesting for the Russell viewpoint as well, because a lot of the things that have been going on over the past month have been very macro-related. A lot of trade war back and forth, some flirting with real war in certain areas and other things like that. All of it primarily macro-directed. We had some statistics on the show recently. I think it said large cap, the S&P names are somewhere around 35, 38% have, of their income and flows are overseas, whereas it's much lower for the Russell. So as we said before, it's kind of, I wouldn't say insulated, but much more protected in the Russell land from those macro currents. So maybe even over the last month, as you've been talking to people, have you seen an uptick in people coming to you and saying, hey, for whatever reason, maybe I'm a little tired of riding these macro trends. Maybe are they starting to take a second look at Russell for that reason alone?
They're always looking at Russell for various reasons. The FTSE Russell family is obviously a global offering. So we have the Russell suite of products. We have the FTSE suite of products. If someone wants to remain global, we have that. We have those indices. But in terms of small cap, which is predominantly domestic 2,000 stocks, I would say the small cap index itself has outperformed the large cap by I think almost 5.5% this year so far, which is for lots of reasons, right? There's a huge U.S. tax cut. U.S. corporations are really benefiting from that. So there's lots of things that are creating that opportunity for small cap stocks that are getting a lot of that buzz that you talk about today.
Well, speaking of buzz, it has been a weird week for all things equities. The markets giveth and take it away. We have seen a general erosion overall in equity volatility as things continue to be a little bit tranquil out there despite the give and take, the push and pull. The market seems to be shrugging off the notion of any sort of trade war. So go figure whether that one's going to reflect back in. Right now, we're really not seeing that play out across the broad spectrum of equity vol. Looking here at the Russells on the E-mini there, and equity vol, index vol off about half a handle or close to it over the course of this past week. So people who thought equity vol was already getting lower, it's got lower again towards the end of this week here, even though we saw a little bit of an uptick today here as we saw a little bit of some mixed bag in the vol space. In fact, right now we're seeing VIX around 12.25 and the Russell VIX, aka our old friend RVX, right around 13.5. So we're seeing a nice little 1.25 point spread, which again is one of the reasons, other reasons people write to us saying they're interested in Russell. It's even in these low times, these period of vol troughs here, we're seeing a little bit more juice out here in all things Russell, which is kind of fun. Looking here, open interest, another strong week for the E-mini Russell 2000 options over there at CME from an open interest perspective, up nearly 13%. So I guess that Reconstitution and the notions of it driving some decent paper out here this week. Again, once again, speaking of weeklies and just the week, you got to look at the weeklies when you're talking anything indices, because that's where the lion's share of the action was. And that was the case again this week with the front week 1680 put. We went out the end of the week here, listeners, or coming into the show at least, right around 1687 in the Russell 2000. So those pretty much front month, at the money, near out of the money puts, the 1680s kind of doing the lion's share of the business out here. And looking here really quickly, if you're looking for some other esoteric paper, did also see some 18.5 calls trading out here in, what are these? These are August here. So there is some upside to be found out here, and a few even some downside 1490 puts trading in the week twos as well. So a bit of a weird selection, but the front month pretty much near out of the money puts, number one with a bullet this week out here in E-mini Russell 2000 land. Mr. Nick, I know you've been keeping an eye on all things Russell. Anything catching your eye from a Russell vol? Maybe Russell vol compared to S&P or NASDAQ vol, or anything else catching your eye out here in Russell land this week, sir? Oh, Mr. Nick, did you fall asleep by Lake Geneva again, sir?
No. Can you hear me okay?
We can hear you now. There you go. I thought you went for a dip in the lake.
No, I'm already back out. I'm in and out. They have waterproof headphones on too, or sweatproof. So I'm in and out. No, I was on a different screen trying to send you a message. So Sean, I want to ask a question, and I sort of know what your response is going to be, but I mean, just from a, are you guys happy with the progression of the OI change in the options? Would you like to see a little bit more, or is it pretty much where you expected?
It's very exciting to see the growth because we went from virtually no really good, strong options volume until the business transitioned to CME. So we're very excited to see the volume and open interest growth. And the stuff the CME is doing to do that and bring market awareness has been just tremendous. The sales efforts have been just I just commend the CME sales force on their efforts. Would I like to see more? Absolutely. I also hear a lot about the Russell 1000, that if there could be more liquidity in the futures on the Russell 1, there would be a stronger customer base trading it. So I'm getting that from clients as well. Let's get that Russell 1 moving because there's a tremendous amount of money benchmarked to it. They'd love to see more liquidity in the product. So excited about that as well.
Yeah, you know.
Are there?
Go ahead. Go ahead, Nick. Go ahead.
I have one other thing. So are there? So when for the market making and stuff like that, do you guys get to incentivize the market makers, or is that on the exchange to incentivize? Like, how do you kickstart the 1,000? Because it would just seem like
that's the CME that
CME
owns that Russell 1000 future, and Russell they own the futures and options. We support them in all their efforts in any and all ways. I work very closely with the CME team, helping them promote the products. But there's CME products, and we are the index behind those products. But our customers talk to us, and we share that information with CME so that the client demand gets listened to, right? And the CME is just fantastic at working with their clients. So.
Yeah, you know.
Got it. Yeah, that's always a curiosity. Sorry, Mark. Go ahead.
No, go ahead. No, that's fine, Nick. It's a little challenging when we're all in different locations here talking over each other, but it makes the show that much more fun, that much more lively here. Yeah, we'll have some more questions I think coming up from listeners about all things. I think some Russell volatility questions. So stay tuned for that. There, Sean. Good old RVX versus VIX and everything. Everyone's got love for RVX in their back pocket there, Sean. So that should be that should give you a warm fuzzy there as we continue on the show. You know, we had our boys from Optiver doing a deep dive into ags last week on the show. Too bad they weren't on with us this week because a lot of things going on yet again in the ag space, Mr. Nick. We probably talked to more ags in the last month, Nick, than we have probably in the last 8 months before that combined, or year before that combined. I don't know. A lot of ags going on, including this week. We saw the beans taking it on the chin again, kind of a combo of some of the issues coming out of China. Of course, China, the biggest buyer of soybeans for the U.S. Also, some relatively decent weather in the U.S. All that combining to really just crush the beans. They had lowest level since pretty much a year ago, since June of last year. Also saw corn hitting roughly 4-month lows and wheat going down to a 1-month low out there. So all out there who were talking ags last week and were interested. I know a lot of you guys. Whenever we talk ags, a lot of people write in. So there is clearly a quiet but active, and when you talk about them, they become vocal, minority of people out there who really like ags and are very interested in learning more about this space. So yeah, this is an interesting one here. We also saw for the July contract, soybeans and corn hitting life of contract lows for those out there in terms of what they saw on the spot out there. So kind of taking a drubbing across the board here on the ags. By the way, you guys can follow along with the reports yourselves, cmegroup.com/TWIFO, TWIFO. That gives you all the reports that we're looking at here right now, free of charge during the show. So go for it. And then you can always kick the tires, get the fully upgraded bells and whistles edition later on over there at Bantix.com. As you might imagine, looking at the beans here right now in Quick Strike, off about 70 handles for the week, right around 900 level out there. So we were talking about, I think they were around we're about 970 this time last week because they're off 70 handles. So yeah, that's the 900 level seemed like a far distant out of the money put when we were talking about it last week. Fast forward a week, and now here it is the at the money. We were talking things over the 1,000 handle out there last week, and people trading up there, and that seemed like very near term out of the money. And now here we are. Those puts are very, very deep in the money. So hopefully you listened to last week's show and you've been trading it up, because it has been interesting out there. Vol kind of exploding in the near term, as you might imagine, with some of those near term contracts really exploding. Even the longer term stuff going up 3, 4, 5, 6 vol points. So the nearer term stuff even more. Again, you get closer, you get those things that are expiring in a week or so. It's mostly gamma, not really vol, but still a big explosion out there as well. I'll let Nick dive into what he's seeing out here skew-wise across the ags. I'll let him take his pick, even though I'm looking at the beans here right now. We'll do a quick rundown here to see what's lighting it up. If you guessed puts in the front month out there, if you guessed July puts in beans were lighting it up this week, you would be correct. But not. You would not be the number one spot with the bull. A lot of puts trading, but number one actually going a little bit farther out and a little bit to the upside. It was the Nove. Pull that back. Here we go. The Nove 1100s, which is about 160 handles out of the money as of right now. Looking at the Nove future, they're lighting it up to the tune of 23, almost 24,000 contracts this week. By the way, let's take a quick check. Open interest up over 8% out here in soybeans. So people were trading it up out here, including on these 1100s, which were clearly a big trade, going back and forth a lot, because with almost 24,000 contracts going up, only a little bit more than 10% of that, about 2,600 actually opening. So a lot of back and forth on this 1100 strike. The 1040s were also active as well. So maybe some verticals going up between those two. I don't know. Interesting stuff there. 1040s doing about 17,000 contracts out there as well. And the Nove contract was where most of the action was. About a third of the action this week going up in that Nove contract. Again, the ags play by a little bit different set of rules, and it's not always all front month all the time. They trade around that planting and harvest schedule. So Nove comes into play. The Nove 900 puts, number 2 out there, with about 21,500 contracts. The lion's share actually on Wednesday, and total of about 3,000 closing on that strike. So a lot of back and forth on all of these strikes out there. I won't go through all the top strikes out here, but a lot of interesting stuff out here in the beans. Mr. Nick, I know you and I collectively both have kind of been getting pulled more into ags of late, which has kind of been interesting for us. We've said many times on the show that vol could probably use a little bit of a bump. Looking at all the products, they were kind of anemic from a vol perspective. This week clearly changed that narrative a bit. What are you seeing out here in the beans, or maybe in the rest of the ags from a vol perspective that's catching your eye?
Well, so first off, I thought was interesting, like coming off all the speculation overnight, and then toward the open on the beans, it was really, really soft on the open, and then it spiked pretty hard back to through settlement on the open. So there were people who thought some of the overnight action was overdone, and it pushed it right back up, and now we're right back to our lows, or we ended up on the session lows for today. So, I mean, there was a lot of intraday volatility as well. So, it's that's going to be something where I'm sure there's going to be a lot of people watching Sunday night when the markets open again. So that's I thought once we saw the bounce back, I thought we might settle back down, meaning people thought it was a little bit overdone, but it could have been. You know how it goes. Friday comes around, people leave early when they think things are kind of stable, and the next thing you know, the market's off. The market's off, and you're in your car and you're slamming on the steering wheel, wishing you stuck around that extra half hour or whatever the case may be. So, but yeah, just to kind of follow up with what the guys talked about from last week, was a good dive in. We learned some stuff, Sean, in that, they refer to what I thought was kind of comically interesting was like they talk about like a September contract being the back month, and it's funny because in the Eurodollars and stuff like that, you're just kind of laughing because there's so many back months that you could trade.
Oh my God, yeah.
But so it's kind of that part we had a good laugh, but it's looking at the numbers, we got a little bit the curves didn't change all that much from a skew standpoint. We got a little bit cheaper in the puts and a little bit more bid in the calls again, but that's probably, and I don't have great connection, so I can't really do a quick comparison of the vol curves, but that's just probably more of a sliding skew, the curve moving along with the futures price. I might have to take a closer look at that, maybe tweet something when I get a little bit better connection. But not a tremendous change in the right now. We're looking at the August. It's got 42 days, and apologize for the background noise here. But not too much of a change in what that skew looks like, and really not that much of a change. Calls firmer probably across the board all the way out to that way back month, March of 2019. But we probably shouldn't even, Mark, honestly, we probably shouldn't even talk about those. Probably stay only talking about the November contract, which, again, we saw, a full-on bid across the board in volatility for the at-the-money, and a little bit cheaper puts and a little bit better bid calls. And, again, another increase of over 8% in the open interest. So a lot of things contributing to the volume and the change in OI, and obviously the price movement in the increased volatility. But it's just giving us reason to pay attention. I think we talked more about corn last week, and I think that we're going to be able to focus on corn, wheat, and beans going forward, and get some good conversation out of that.
Yeah, it's been interesting. That's one of the reasons I like doing the show is it pulls you into a lot of different directions that you maybe wouldn't normally have time to squeeze into your day. And certainly getting the deep dive into the ags is something I didn't have time to do until recently. So it's kind of nice to catch up on the different nuances and then the trading and all the interest. And clearly, I love hearing from the audience whenever we talk ags, because clearly the ag guys love it. They're really a motivated bunch out there. So we love hearing from you guys, and you guys clearly love them. We could probably do a whole show every week about ags. People would certainly be happy. Really quickly before we move off the ags tip, I forgot to mention this last week. I wasn't even aware of this, but CME and Purdue do a joint what they call the Ag Barometer, the ag producer sentiment. They kind of poll 400 agricultural producers from around the U.S. and ask them pretty much what they think about what's going on in the farm and agricultural economy right now. Are they bullish or bearish? And as of the most recent reading from May, it was pretty much the highest they've had in quite some time. It hit 16 points higher than their April reading. It's the first time it's hit this 140 level threshold since November of 2016, which is kind of surprising because May was clearly, we knew about the trade wars were looming by then. It wasn't a surprise. So you'd think the people in the ag sector might be a little bit concerned, a little bit skittish that one of their largest consumers, some of their products could be taken off the table, and yet that wasn't the case. The ag sentiment there was the highest it's been in quite some time. Highest level since Jan of 2017. For this index. So a little bit surprising there, given the developments we saw this week. I wonder when they do that poll again for June if that number may change. But for now at least, a little bit surprising. Ag folks still bullish, still optimistic, despite the fact that there's a lot of concern right now about one of their biggest players being potentially taken off the table. Speaking of big players, you're talking big players, a lot of big players out here in WTI and crude land. It's been another interesting week out here in crude land as well, with WTI settling out the week right around 65, kind of off about a half a handle to a handle, kind of depending where you're looking out there on the term structure over the course of the week, but stayed kind of pretty much below that. A lot of people were looking at that 67 level was kind of a level. A lot of people were watching to see if we could maybe break through that or sustain through that over the course of the week. Turned out that wasn't the case. A lot of questions still lingering out there about what's going on with OPEC. Is Russia going to stay on with these production cuts? Or are they going to start turning the spigot on a little bit more? Also, the rigs count, other things all going on to kind of combine to put a little bit of a near-term ceiling here on all things crude. Russia coming out saying they supported the cuts in principle, but or a gradual increase, I should say, in production in principle after limiting things for 18 months. So it does sound like Russia is on the horn to start perhaps dialing up that spigot, which would, of course, start leaning heavily on all things crude. We did see the vol up here actually taking a bit of a lift, which is kind of, I'm sure for a lot of you out there, a welcome development. Crude's kind of like gold in the sense that it needed a little bit of a shot in the arm from a vol perspective. Now, we've seen this before. We've seen a little bit of a pop of about a point to a couple of points in the narrow term contract. We've seen this before whenever, crude has some interesting developments. The question is, can it last? Can it survive? Can we go into some new sort of volatility regime for crude? And the answer has been pretty much for the past year has always been no. It gets a little bit of a shot in the arm and it comes right back down. It remains to be seen if this is the case. If we hang out here this time next week, we're not going to be at these vol levels. It will come in again. If we start selling off more, we start driving down to the downside, then we, of course, we may see crude vol get a new little burst here. We'll see. We know last time OPEC made that big structural type of change with the cuts is the last time we saw a really big skew and volatility seismic change out there in WTI in terms of the vol regime and everything else all changed that November. So if they make some big changes out here, that could have a similar impact. But right now, we're still playing wait and see out here in terms of crude and indeed in crude vol. And we settle out right here, right around the 65 handle, like I mentioned. In terms of number one with a bullet out here this week, coming in the AUG contract cycle, it was the AUG 58 puts, so not that near out of the money puts. You might think 60, you might even think 62 half, something like that, maybe even 65, but no, 58 puts taking the pole position here this week with about 14, almost 15,000 contracts. By the way, OI this week out here in WTI looking fairly strong, up about 5%, so another robust week for WTI, almost half, about 43% of that paper coming in that AUG contract. So AUG was where the action was yet again. Excuse me. I meant August there. And 14,000, 8,000, almost 9,000 that coming today. So today's a little bit of a move, sparking some love in that 58 contract. Number two are the AUG 70s, 11,000 and change. Again, today's action is almost half of that, almost 5,000 going up today alone. So again, the OI numbers going to be a little bit skewed on these because we don't have today's numbers, obviously, for OI. Number three, the 60 puts out here in AUG, 10,000 and change. So again, pretty much all AUG all the time. 62 puts, 8,000 and change. And then we dropped to 65 puts, which is where you think might have been a little bit higher up, doing almost 8,000 as well. So a lot of action in puts out here this week. Again, not terribly surprising in that front. Also a lot of it out here in this AUG contract. Let's do a quick scan here before we toss it off to Mr. Nick to talk Texas tea to see if we see any really esoteric strikes lighting it up. These June 2019 55 puts actually doing about 4,000 contracts. So that's pretty active out there for those coming up later this week. And if that's not enough for you, if you're saying out there, you know what, I'm a crude bull and I don't care. We talked last week about the par calls lighting it up in D's 2020 and D's 2019. We saw a similar volume going up this week to the tune of 5,000 of the D's 2020 par calls going up. Actually, 5,500 looks like. Yeah, 4,500 on Wednesday and 1,000 on Thursday. All of that pretty much opening paper, listeners. So a lot more people piling into the par calls in 2020. And if you want to go a little bit closer to home, the 2019 par calls also lighting it up to the tune of 3,500. That, worthy of note, is closing by about 1,000 contracts there. So maybe someone deciding already, that would be early to decide that, but deciding maybe to roll to 2020, they decided maybe 100 in 2019 was a bridge too far, rolling to 2020. And if that's not weird enough for you, all the way out there in D's 2021, someone trading 1,000 of the 32 half puts. Mr. Nick, can you imagine if we got back there? Remember those good old days when we were threatening the mid-30s and crude? Seems like a lifetime ago, doesn't it?
Yeah, I don't know. Were we on the air? Yeah, I guess we were on the air back then at that point, right? When Citibank told us that crude was
yes,
going to trade between 30 and
48 point
yeah.
range that they guaranteed us for crude. Yeah, that outlandish bold prediction.
Thank you, Citi. They're still right. That we're between 30 and 70. Crude this morning, Brent was off quite a bit more percentage-wise than the WTI, and that kind of surprised me. So I wasn't really looking for a reason why that might have been the case. But with all the talk in general in the market, I was just surprised to see it, be that much more down than the WTI. But as far as what we're seeing here today, we're up. Volatility's up, but vol was kind of cheap, so a little bit of move through. The 65 strike is what pushed the volatility up. So if you watched the intraday volatility, you saw as the price went down and went through that strike, that's when we started to get a little bit of the bump in vol. Now, the 65 strike had it was really high open interest. And whenever you get to a high open interest strike, that's sort of a pivot in the market. You're going to see a lot of activity around that because you're going to see people that are short defend it, and you're going to see people that are long defend it. So there's a lot of gamma scalp and stuff going around there. So we had that little bit of a push down. I think that's what kicked the volatility up. But with all the OPEC talk that's next week now, I think they've kind of showed their hands a little bit in terms of maybe a little bit of increased production. And I believe that's probably why we got the push down in the futures over the last few days. But I think this volatility spike probably, based on some of the people that I talk to and some of the feeds that I watch, one guy in particular, Dollar Fire, he's super sharp and has a lot of market making years, and he was looking for a little bit of a bump here in the WTI to sell some volatility at that 65 strike. And I don't know if you recall, Mark, after the show, I think Saturday when I went into work, I put out this, I called it the August spider trade, where I sold the straddle and then bought put spread and call spread around the straddle to get a good amount of premium and then to get some protection on the downside or the upside if the market made up their mind where they're going to go. But I think that you're going to see, based on the fact that the 60 and the 70 strike are max open interest on the downside and the upside, and the 65 has got a lot of activity around here and a lot of defense, and it's a real big pivot point for this market in terms of which direction we're going to go. So I would think that this little spike is going to get sold off. We'll probably drift maybe, I don't know. We may drift a little bit lower tomorrow. Or on Monday, that would probably push the vol a little bit higher if people think we're going to get down towards that 60 strike, but I don't think so. I think we're going to kind of waver around here. I'm going to do better than Citibank. I'm going to say I think we're going to trade between 60 and 70 for a little bit of time here, at least until the OPEC announcement, which is next Friday, I think. And then after that, who knows? And vol could really come crashing in if they say they're going to be generally neutral to a little bit of increased production. I don't think we can go too much below the 60, but then again, I'm just looking at open interest and volatility, but nothing else really. 5% increase in open interest, about 2.5 million open in the 3 years that we have loaded up into Quick Strike. There's another 7, but there's not much OI there, and then calls offered, puts pretty much the same. So a little bit of a slide back down the vol curve with a little bit of bump in volatility. So nothing really super interesting volatility wise, but just the mention of the strikes that you had talked about, varied strike range, pretty much call biased in the deferred months, but pretty flat in the August, which is telling you people aren't really sure what's going on. I think we're going to hang around the 65 this week.
Nick, I'm going to use the option flow to guide my city prediction. You ready for this outlandish prediction? I think by the end of 2019, we'll be between 32.5 and 100. How about that? How's that for a daring, bold prediction? What do you think?
You're hired, and you met your PMP requirement, and you're going to get a bonus.
I'm done. I'm done. I'm good.
And a new office.
I'm good for the year. Who's not done, though, are you guys. You guys got a ton of questions for us. So let's get on rolling right into a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody. I love that music, by the way. It's so great. I was dancing along to it. You know, me and the listeners loved it, you guys. I know you guys couldn't hear it, so you guys can just hum along in your head. But the listeners and I all enjoyed that lovely, lovely drop. Yes, of course, it is time for your questions. We start as we like to do whenever we get folks streaming in, listening live, like to ask questions. Your buddy Mark Brandt's in the chat right now, Mr. Nick. He's bombarding you with questions here. I'll see if I can get to some of them. He loves having you on the show. He thinks you're in Switzerland, though, so we won't disabuse him of that notion of your exotic travel schedule. But he wants to know if Nick uses weather to trade the ags, and he also wants to know if you have any esoteric Eurodollar options info to share with us. He knows you're a big fan of the Eurodollars. So you got any of that up your sleeve for us, Mr. Nick? Anything crazy in your blues and reds and all the other fun stuff?
Oh, say the first part again.
He wants to know if you use weather to trade the ags, if you're actually trading the ags, or you're using weather to do so, and then B, do you have any esoteric Eurodollar options info to share with us, sir?
I probably I'm a market watcher, Mark, more than I am anything else. I got too much going on with Quick Strike to pay too much attention. But would I use weather? Maybe I don't know. I like looking at the vol and the OI and stuff like that. I'm sure I'd pay attention to the weather, but only from the standpoint of the smarter people than me. So I probably wouldn't follow myself. I would just look for prediction from the people that are most in the know and let them tell me if they think something happens, if we have a wet season, that this is going to happen. If it's dry, this is going to happen. So I probably would add it in, but for the most part, I'm just looking at the options related information, and that's where I get most of my discussion points. As far as the esoteric stuff in the Eurodollars, I don't know if everybody's completely aware of the fact that they added 3-month, 6-month, and 9-month expirations on the second year of the Eurodollar contract. So actually on 3 more futures months. So what that did is, what happened is as that front red contract started to roll forward to become almost a white contract, its short-dated options, or mid-curve. Short-dated is like what they call it in the ags, and they call it the mid-curves in the Eurodollars. That contract had massive open interest. And then once that June rolled off, there was no more trade. So it went from a very active option-oriented future to now a far out single contract option only, because it moved into the fourth white space. So what they did is they added 2 or 3 more, and then they'll keep adding serial options to that contract, and then to the next contract and the next contract. That's why they call it 3-month, 6-month, and 9-month, and then the short reds are 1-year mid curves. So that's a little bit of esoteric, and what that allows people to do is really trade that a little bit further out portion of the interest rate market. So that's probably the bigger news that's come out there in the last couple of weeks. So those are listed. There's not a whole lot of markets being made on them just yet, but they're expecting the floor to start the action, and then the screens to pick it up, because the screens have very good liquid, tight, short dated or mid curve option markets out there. So in due time, once people sort of figure this out and see, I think it'll be a good trade, because it's on a real active part of the curve. It's on a part of the curve that had lots and lots of OI that gets washed away. And once people start realizing that they're there, and the markets get a little bit tighter, it's gonna be a good spot. So that's a little esoteric, because that's something that not a lot of people know about, and that adds the number of options that trade in the Eurodollars, oh my goodness, to like 60, I think. So that's a lot to pay attention to. And I will do one other thing. So I was talking to Dave Reef over at the CME, and I was joking with him about, in the old days, Donnie Wilson, when he was in the pit, if a new contract came out, he would just make a market and trade in every strike, just so he could open up and people would start paying attention. So we need somebody to come in there and do the same thing, so people see that stuff on the board, see it settle, and take some action, because those are going to be good contracts.
Because that's what Eurodollar needed. It needed more contracts to trade, right? It was there were not enough. It was too light out there. Don't you agree?
Oh, So, well, you know what? You know what happens is, you notice, if you guys notice, like when we were stagnant in the rate market, most of the trade took place in like the second and third year of the mid curves, because that's where the action was going to be. So the white contracts had, and those cereals had really no action. But that first month outside the whites, it actually needs contracts to trade, because that's always going to be in play. When you're talking about interest rate, now the whites have real high open interest, more than the shorts. And then, you get that transition from red to white. You need that. I think people are going to enjoy having that shorter dated activity. It's going to be good gamma. That's a good part of the curve. Because if you look at the Eurodollar term structure, it's kind of like holding a jump rope and, flopping it up and down. You get a little bit, you get your wrist moving up and down with the jump rope, but you don't get a lot of movement in that front contract, but you start to get more and more movement as you go out the curve. So I think it's going to be good. And yeah, did it need more? Well, in the old days when we had to fold 60 sheets to go down there, and you had 3 vol runs in each sheet and you had to flip through them. Yeah, we didn't need them more then, but I mean, now with everything electronic and getting generated that way, it's probably fine.
Yeah, I think Eurodollars were too simple. They were too easy to understand before this. So the addition of new contracts should help to add a much needed layer of complexity out there, which I think that product needed. I'm being sarcastic, in case you can't tell by my tone here, listeners. Olive Trader quickly wants to know here. He wanted to know ahead of the decision. Obviously, he wanted to know if gold vol could go bid after the Fed decision. Well, it looks like the answers are a resounding no there, Olive Trader. I'm looking at it right now here on Quick Strike, and we're off about a half a handle or so from a vol point here post decision. Gold off on the week, about 25 handles out there as well. So usually
I got something here.
Oh, you got something here? Go for it, Mr. Nick.
I just think I've said it all along, and I've said it the last 2 or 3 weeks. We thought when gold was trading around 1,300, and it sat around for a couple of weeks, that it was a good option buy, hedged option buy. Now and it more than likely was, just based on the delta. So now you're 25 handles lower, with no reason. Like, I talked to a few of my friends, and I was asking them, why is gold lower? And there was some speculation that there was like a general defense of emerging market currencies, and there was some sell-off of the gold in order to defend those currencies. But really, we had that was like kind of we're reaching for reasons for gold to be off. So gold off, not really sure why. If you can go out there, vols in, gold's off, out 25 handles, 2%. Go buy the at the money, or go buy the 25 or 30 delta or 20 delta put. If we keep going, it's going to get bid, and if we move back up, your money's back by the time we get to the 1,300 strike again. I will continue to say that is the trade to do, because you get leverage by having a hedged position. You get to play with the market movement, and you get to be in a really low vol purchasing environment. So anyway, that's what I have to say about gold.
Speaking of buying premium in some of these names, we asked our listeners this week, going back to the old gun to your head, if you had to buy the old weekly straddle, this time expiring on the 22nd. So weekly at the money straddles, basically, in one of these 4 names, gave you the S&P, gold, Facebook, or Tesla. Throw a few equities in there as well. So far, Tesla leading the charge. Surprise, surprise. That's a $22 at the money straddle, by the way. So that's not insignificant. Yeah, people wanted to buy that one. 28% coming in with Facebook, 20% for gold. So gold getting a little bit of love. Not a lot of lovers to buy S&P vol, even though S&P realized vol around to 5%. So it's pretty anemic. I guess people thinking it's going to stay there. You got a couple days left to vote in that poll. A bunch of you have already, listeners, but get your voices heard over there. Add options if you haven't done so already. Here's a good one for both you, Nick, and you, Sean. I'd be curious to hear both your thoughts on this. I'm not sure. I guess it's more of a tools question. He wants to know, this is ADAC, wants to know, is there an easy way to compare the relative skew levels of E-mini Russell versus E-mini S&P? I like how he spells out S&P. He's very proper. Maybe he's British. I don't know. But, this is a question we get a lot, because that's what drives a lot of volume, particularly between these two products, is when the spreads get kind of wonky, whether it's at the money vol, whether it's skew getting different between the two. That's when people like to spread between the two. Maybe Sean, we'll start with you, because you're engaging with all the clients out there at the end of the day. When you talk to these guys, I know a lot of them are spreading back and forth. I don't know, or maybe Nick, you have something on this too, because in terms of maybe there's an easy way to compare and contrast them in quick strikes. Maybe Sean, you have any ideas here for ADAC? Then we'll toss to Nick.
Yeah, just kind of historically, small caps have historically been more volatile than large caps. So the skew has always been just slightly steeper, historically speaking. The market ebbs and flows, and right now I think it's much flatter, or it has been as recent. Very, very tight spread between the two volatilities, which again brings up RVX, right? And the spread between VIX and RVX is at a tighter spread than it has been historically as well. But Nick, you could probably talk more from strike to strike and talk about volatility.
I think it's a little bit of what Sean says, because he has the exposure to what the Russell's been doing for a longer period of time and the indexes in general. I think we'll get better answers as the Russell's on there and there's more open interest in the contracts. But you can definitely, there are tools. I mean, we provide tools that will allow you to do that. You can, if you register, the real comprehensive tools are in the subscription version of Quick Strike, where you can get extended history of our quick volatility tool. But there is a place where you can go and look and sample that with 30 days of history. Not going to give you much, but at least to give you a little bit of an idea of what it looks like. You can go out and register for a Quick Strike Essentials account, and then in the Quick Vol tool, you'll be able to use our volatility spread builder, and that volatility spread builder will not only let you look at the money volatility, but you can look at any one of the deltas from 5 to 45. You can plot those against each other across products. So you'll be able to pull up a Russell and an S&P, or a Russell and a NASDAQ, whatever you want to do, and plot those against each other. So those are out there. Again, cmegroup.com/quick strike, and then you can register for Essentials. And then if you need more historicals, you can take a look at our professional edition, which gives you 1 year. And then there are quick volatility product in and of itself that has, at this point, has history back to the beginning of 2011, and will shortly, probably by the end of the month, we'll have history back to 2007. So there'll be a lot of things that you can look at and compare on those screens.
So there you go, ADAC. There is an easy way to do it. I knew you could see the at-the-monies of each. I didn't know if you could do it on the same screen and analyze it in Quick Strike. It sounds like you can with that spread builder tool. So there you go. Listen, now you can see it on the same screen and look at them, compare and contrast, go crazy. Quick Strike is the way to do. I had a feeling you would have that tool in there, Mr. Nick, but I wanted to hear it from the horse's mouth, so to speak. Speaking of which, the horse's mouth, you were just talking RVX. Sean, is a good way to wind up here. We got a question on your beloved RVX. This comes from Sylvan6. He says, I think I was the one guy who used to trade RVX by options back in the day. So he was the guy, Sean. This guy, Sylvan6. He says, can you ask the FTSE guy for an update? I guess that's you, Sean. You're the FTSE guy. Can you ask a FTSE guy for an update on RVX options? I see some juicy spreads lining up with VIX, and I would love to get back in action. All right, Sean, what can I tell Mr. Sylvan6? When can he hopefully start slinging some RVX options again?
Good question. We're always looking at it, and we're again, CBOE is out there reaching clients and talking to them literally on a day-by-day basis to see which products would work next. And RVX is one of those suites of products. I think you just need to get the underlying trading a little more and get some anchored open interest, and then the derivatives world goes into the next suite of product, right? So let's get that RVX trading in higher volumes, and options come behind that.
So there you go. Start slinging yourselves some RVX if you want to get the options going. And then you can get going with the options as well. That music, listeners, means unfortunately we come to the end of another epic. What an epic journey it was. We touched on a little bit. We didn't even get to. We're going to get to crypto. We ran out of time. People are hitting us up left and right and center about crypto going on with the SEC this week, about some of the investigations going on, the tying versus tether, all that good stuff. Crypto taking it on the chin this week, down to about 6,200 in Bitcoin, I believe. The futures lighting it up at CME, doing some decent volume again today. Unfortunately, just ran out of time, listeners. All your questions about RVX drove us to to the end in your esoteric Eurodollar question. So don't worry, we'll get to more crypto on next week's show. We'll also get it on some of the earlier in the week, maybe some OB and stuff, so you won't be left hanging, all you crypto lovers. I know you're out there, so we'll get you covered soon here on the network. But before we go, let me go back around the horn to each of my cohorts, my partners in crime, see what they have cooking. Sean, we'll start with you. I know you're deep in the weeds of Reconstitution, so that's probably taking up all your time right now, but maybe what can we expect coming down the pike from you guys over there at FTSE Russell these days, sir?
You said it. Recon is where it's at. Next week's a big week for us, and record volumes, and we're gonna. It's actually a very exciting time for the market, and looking forward to that. So I'll be in New York for the festivities next week, and be talking to you guys real soon.
Oh, there are actual festivities. There's a big party. Where's my invite, sir? I couldn't go, but I like to at least be invited to these things. It makes me feel good.
Festivity in regards to bell ringing ceremony, not so much the fiestas, unfortunately.
I was looking forward to a big FTSE Russell party.
I don't think there's a FTSE Russell employee that has any time off during a recon. So
I'll look forward to next year's shindig. How about that? Put that into the higher ups. A big shindig, maybe a fiesta in time for recon. Yeah, that's a good idea. I like that. Maybe
wherever I am, you will be, Mark.
We can do TWIFO live from the fiesta next year. How about that? How's that for a plan?
Nice. I like that.
We'll wear sombreros. It'll be great. It'll be good stuff. I'm already planning it for you guys. You guys don't need to do anything. Just show up. All right. And Mr. Nick, you're also coming to the fiesta next year. In between now and then, though, what can we expect from you guys at Quick Strike, sir?
Well, I'm actually going to be in New York next week, so maybe I'll
can go to the fiesta yourself.
Hang
Thursday and Friday, Nick, if you're there.
I'll be there Thursday for a little while, not Friday. But
okay.
What's coming down the pike for us? Same, I had mentioned some tools coming out at the end of this month, beginning of next month. You're going to see the release of a new and improved quick volatility tool, and I mentioned a little bit how it's going to have an increased date range for historical data. You will now be able to purchase data for download, so you'll be able to run through and pay for any thing you could think of, volatility curves for strike, delta, moneyness 2, standard deviation. There's going to be good stuff. You're going to be able to get that as a curve, so you can utilize it as an equation and do it yourself. You're going to be able to get that flattened out. You can, it's going to be a lot of different stuff. There's going to be futures-related things as well, where you can get realized volatilities for 5, 10, 20, 30, and 60-day volatility. Is going to be a lot coming down, and that's all going to be available in the new Quick Vol subscription. So we'll be talking about that more and more as we get to the end of the month and into the next.
There you go. Check it out. I like it. Getting into the bespoke data game there, Mr. Nick. I like that. You come in, download what you need, and then you're off to the races. Check it out. Bantix.com. To get the full kit and caboodle over there, listeners over there. And, of course, you can always check out all of Nick's tools and things as well if you want to sample them first. That's cmegroup.com/TWIFO. That's where the reports live during the week as well. They're not always live. They're live during the showtime, not always live afterwards. But you guys can go kick the tires over there, see exactly what we're talking about, looking at skew tools and open interest and volume and unusual activity. You can see how we see everything in a snapshot there yourself, so you can get on over there and learn for yourself. And on behalf of Sean and Mr. Nick and our friends at CME and indeed myself, I want to thank all of you out there for downloading, streaming, and subscribing. And, of course, for asking so many great questions. Keep them coming. Maybe we'll do a whole Q&A episode one of these days because you guys hit us up with a lot of stuff. So stay tuned for that, and we'll see you next week for more of This Week in Futures Options.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.